Good, I'm live. Perfect. It's the best way to do this. We can talk about all kinds of cool stuff. I don't have to wait for the stock market to go down 700 points to do it. So let's see if this gets any attention on here. I can deal with your guys' questions directly. Might be a lot more fun that way. So this is just kind of a test run, but I want to see if anybody pops up here and wants to hit the independent investor channel up directly. If they've got any direct questions. Here, let me adjust this light a little bit. Yeah, there we go. Much better. Yeah, and I'm not barefoot, but I film all my videos in bare feet. So sorry to disappoint you guys. If some of you guys are hoping for the barefooted version, but it's been a long week. So certainly take some questions on here. Somebody can hit me up if they want to. That would be awesome. It's been a busy week. Honestly, I've been deploying a lot of defensive strategies this week in the stock market. It's been cranky. It's been amazing how, a lot of the tone changes in a lot of the news medias, I mean, it's amazing how last month, everything was perfectly fine. Companies were doing perfectly fine. The economy was chugging along just fine. But it seems like everybody wants to kind of jump on this bandwagon of doom and gloom. So it's amazing to me, really how the attitude can change so quickly. But the mentality about approaching investing really doesn't need to change at all from day to day, month to month. And certainly if you were going to try to buy into all the noise that's pushed through our few news medias, you'd be lost, no doubt about it. So that's really why I try to offer those principles that are going to stand the test of time. So you don't have to really listen to that. I deploy a very useful technique when the stock market gets very volatile like this, and I won't watch it, honestly. I've made a few stock moves, but nothing really too crazy. I did a ton of maneuvering really through most of the year in 2017, kind of just preparing for this downturn. And I actually said February 2018 was going to be cranky, no doubt. You get over that holiday spirit, the holiday, euphoria, I think is a fair term. And it happens every single year. I've seen this for years. But I think a lot of new investors are probably being taught a lot about their own risk tolerance. And if there's any takeaway from, weathering through the vulnerability that we've had, especially over the last couple of weeks, it's a great time to reassess. I mean, the last thing that you want to do is start panicking and exiting the stock market. And that's why I talked when I started getting involved with the Independent Investor channel and YouTube specifically, I talked about the stock market being a humbling place. I mean, it's humbling. There's no doubt about it. It'll humble you to your knees. And, so what do we do? Do we just not invest? I mean, that's an option. I mean, if you can't handle the swings of the stock market, don't invest. But the same token, I'm one of those guys that always advocate for the everyday investor, right? I always say it's something that everybody should do. But if it's something that everybody should do and not a lot of people have a lot of knowledge about it, then how are we supposed to succeed in the stock market, when I expect you guys to be watching me, and advocating for regular people, because I am one. I'm a hardworking guy. I don't like to see my accounts go up and down, jerked around from day to day. I don't like it. But it really just kind of comes with the territory when you're looking to become an investor. I kind of got my first question here. This is kind of cool, actually. This is actually one of my subscribers I recognize. Very cool. So I don't know if this notifies you guys, but the more and more I can do this ad lib way better. So you guys can actually just directly shoot your questions over at me. So the question is from Eyes of a Goat. Can you comment on the financial sector this past week? I'm buy and hold, but was wondering why financials were down. It's been awkward because the financial sector for the last decade has been beat down. Historically, valuations in the financial sector are they're attractive. Okay. My favorite stock in the financial sector right now is Citigroup. I don't own Citigroup. I own JP Morgan, and I own American Tower REIT, which is actually registered in the financial services sector, but I'm not really sure how it's not more of a real estate play. So if you guys have more to offer on that, certainly go ahead and offer that. But I think the financial sector is extremely attractive right here. I like Bank of America. I own Wells Fargo as well. So for you guys who are looking for financial exposure, look no further than your big banks. I've recommended USB on this channel, but I'm an owner of Wells Fargo. The fundamentals are phenomenal for a $250 billion market cap. You really can't go wrong. Sit on this dividend while this shakeup. But I honestly look at this not necessarily as a secular rotation out of financials. No way. I just think financials, like everything else, is being kind of swallowed up by this negative sentiment right now in the market. And that's what I'm chalking this up to. I think right now there's just too much negative sentiment in the market. No way. I mean, I wake up every morning, I check the pre-market before it opens, and I know before the market even opens that we're going to have a nasty day. And that's just how it's been. It's been bad. Thank you for your question. I really appreciate that. That's awesome. So those are the types of things. If you guys fire away at me, you can get my quick insight. Now, my insight doesn't do you guys any good unless you guys are willing to take this information and put a Citigroup into a self-directed Roth IRA account. I was just in Bank of America today, funny enough, and actually ended up across the table from a Merrill Lynch representative. And it was kind of cool to talk to him. And I actually just asked him outright. I said, what kind of account do you have? And he says, I've got a self-directed account. And I said, that's interesting. So you recommend that people get involved with managed accounts, but you yourself own a self-directed account? So I kind of found that was funny when I pulled back the curtain on that a little bit. I love Bank of America. I'll continue to do business with Bank of America. I'm happy with their services. It's totally fine. But if you're looking to get some exposure to the financial sector, I think you're looking at valuations from 10 to 15. I like Goldman Sachs. It's one I don't own, but certainly don't have to look too much further than really the top four that I recommend: JP Morgan, Citigroup, Wells Fargo, and I'd probably add a fourth one to the list if I had to, probably Bank of America with a little bit more risk tolerance. I mean, guys, I remember when Bank of America was all the way down to $6. I knew folks that had owned it for their entire life into the 50s, and so when it took a downturn, it was pretty catastrophic for them. So thank you very much for your question. I appreciate it. This is a test run, so I'm doing this all ad lib, but I'd like to do it more of a Friday session. I end up getting to talk to my GoPro most of the time when I'm filming my YouTube videos. So I'd really rather have a little bit more engaging experience with my audience, because I think you guys have a ton of cool stuff to say. I love it. I think it's great. I've learned a lot from this channel. I've learned a lot from some of the very interesting. I mean, Tony Robbins is one of my very favorites that I've come across. And then JL Collins. JL Collins, I've actually shared his posts in my Facebook group. So if you guys have not kicked over to the Facebook group, man, I encourage you to do it. It's awesome. I mean, right, wrong, or indifferent, you kick in there. Maybe you pick up a few things that you like, what somebody heard or is saying, and you haven't heard it before. You can only benefit from it, because the cool thing about Facebook group is, it's going on all the time. I mean, it's something that you can kind of kick into, hey, Tim, what's going on, man? Awesome. Very cool. Good to see you guys, man, on a Friday. I've been like kind of off the group a little bit, to be honest. I'm kind of working through a pretty stressful time in my life, man. I got a military move. So I've been back and forth from Virginia, from New York. It's about 6 hours. So I'm all about it. Do you think we will see more than a correction in the near future? That's the $50 million question. That's an awesome question. The Elite Taylor asked that. Yeah, I do. I think this year is going to be pretty choppy. You have to remember that the stock market went up so fast, so furiously after Donald Trump was elected president, man. I was surprised. I couldn't believe it. I mean, if you asked me to bet on who was going to win the presidency, there's no way I would have placed my bet on that happening. And you saw that. It was indicative. The night, that he won, the stock market tanked. And it's been almost on a vertical tear. I've never seen this upswing in the stock market. And here we start to reach a little bit of volatility. We had a 10% correction in February, which is completely normal. I mean, it's completely normal. I've weathered through one 40% downturn. That was pretty severe. And in retrospect, the best thing I could do through the whole thing was just ignore it. That's it. I mean, that's just the way of it. You're welcome. Somebody's thanking me for doing live. I'm in my forte, no doubt about it. I love doing this off the cuff because I can talk finances all night, no problem. It's all for you guys, no doubt. Because I've done this quite a long time, but it doesn't mean that I've done it right my whole life, and it's amazing. I've got Nyela. She's from Canada. Very cool, awesome subscriber, man. They sent her some self-direct help. That was pretty cool. An intelligent investor, man, awesome, long-time follower. Hey, Ryan, Rob from Boston here. Just jumped on, but wanted to say hi. And you're always the voice of reason. Reminder for new investors: this is a blip on the radar of 30 plus years of investing career. Yeah, no doubt. Seriously, the quicker you can start. I'm helping a lot of folks at work too. A lot of young folks, man. There's Ernesto, one of my most loyal subscribers, man, from the beginning. No doubt about it. We're building something pretty special, guys. Honestly, it's a lot more simple than we make it out to be. The reason I picked YouTube, it was just an awesome platform. It's a hip platform. I'm a big fan of Google, but the idea was that we take a very, very critical niche idea that not a lot of people were privy to, man. Try me out. If you're tuning into the Independent Investor channel, man, and you haven't been tuning in for that long, ask how many people out there invest in the stock market on their own, and you'd be amazed at what answer you get. I think a lot of people would look at you like you're crazy. It's one of those things that it's really disappointing because I'm enlightened to the prospects of it. There's no doubt. I mean, I'm just a working class guy, and it's amazing to watch your money when it's liberated. Now, when the stock market is doing this, what it's doing now, the only reservation that you actually have is that you have good quality assets in a bucket that is not consuming you. Because if you're in a financial planning situation, like the majority of people out there, when the stock market does this, all right, the financial planners are getting paid no matter what. They're getting paid their 3%, all right? So in a down stock market, the 3% comes right off the top. You're the one taking all the risk, guys. Now, my account is going down just like everybody else's, okay? But don't think just because you are with a financial planner that somehow they are giving you some sort of strategic advantage. They're not. They're not giving you any advantage. And that's why financial planners, the first thing that they'll tell you is to hold true on the stock market, hold true, because they don't really care what you do outside of just staying long with them. They don't care, because whatever dollars that you have with them, they're going to get paid on those dollars. So they want to keep you calm. They want to keep you invested, right? And I talk all the time about them not having your financial best interest in mind, because they're not bound to have that, okay? So they'll channel your money into and lump it onto the big pile just like everybody else. And that's what happens. And, when the stock market does this, man, they get paid their money, whatever it is, 2.5%, 3%. I talk about it all the time. I've got Julio coming on. Hi, Ryan. How do you think the tariffs that President Trump is trying to impose are going to affect the stock market? I have a small position in BABA, and I want to hold and buy for the next decade. Okay, I'll discuss your latter topic first, all right? Alibaba is a great buy. I would almost rather purchase Alibaba than Amazon, okay? I really would. Now, I have some reservation about buying other Chinese stocks. One I've recommended is China Mobile, and China Mobile is running at a valuation right now that's anemic. It's amazing that you could buy the biggest telecom company. The problem and the hindrance is their stewardship of their dividend. Remember, it's owned by the Chinese government, okay? And they pay out around 30 to 35% of that dividend. And a company like Verizon pays out 70%, all right? And so the Chinese government can do whatever they want. If they want to keep the dividend, that's wonderful. What does that mean for small-time investors? It's kind of tough luck. If you're going to invest in a stock like that, that's just kind of what you get. And that's part of a lot of the reservation. Now, I own China Mobile. I've recommended it to you guys. It's a great telecom play. But the question is regard to the tariffs. Here's the thing. I believe that we have got way too complacent on being the crutch of other nations. Okay, that's what I believe. All right, that's my personal belief. And if there's a political undertone to that, so be it. That's fine. But here's the thing. The only way that it's going to affect the United States is if China says the United States is a relationship that we do not need. Therefore, it is worth putting at risk. All right. Now, if we were playing in a world where all things were equal, okay, then I would say, what in the hell are we doing as the United States going after our biggest trading partner, in China? Our relationship, our trade relationships are pivotal, okay? But I think the idea here really is just to call somebody's bluff a little bit and say, look, we need fair trade, right? And I understand this is kind of echoing what the president's talking about, but do you really understand everything that's going on by just watching the news media? If you tuned into CNN, you would understand that this might be the worst economic decision ever. But if you kind of understand, I can't speak too much about my job through YouTube, and I won't do that. But what I see coming in through the ports of the United States is appalling. You guys have no idea. It's so much cheaper for the U.S. to import goods than it is to actually manufacture our goods and send them away from here. Do I think in the short term that the tariffs are going to create some volatility in the stock market? Yeah, I do. I sure do. But I think there was some other factors at play there, with the Fed raising interest rates again. I think Powell's the perfect guy for the job as the Fed chair. We have to wait and see what happens. I'm not one of those investors that look at geopolitical events and think that somehow that has to change my strategic approach to investing in the stock market. If you can just keep it simple that stocks go up and stocks go down, right? And for the long term, all we're looking to get out of this deal is a 7% rate of return in the correct bucket, right? The self-directed account. And then whatever asset we house within that bucket to achieve that 7 to 8%, maybe more rate of return, that's all we could ever hope for. And we're being successful investors. The only way that we compromise that is when we throw in the towel on things and think, oh my goodness, Trump's going to start a trade war, or something like that. And is it really going to materialize like that? I don't know, really. I think the ball is in China's court. But I don't think the United States is one of those countries that doesn't have a lot of leverage. And I think for years we gave a lot of that leverage away and never used it at all to create at least a level playing field. So because it's been so unlevel for years, now it seems much more jarring when we decide to call somebody's bluff. So pretty good stuff. Thanks for the financial education. All the info you give helped me start investing. Well, that's what it's about. I'd like to think that I empowered you to invest, but certainly I want you to understand why you invest on your own. That was from the Czar. I think I pronounced that correct. I got a lot of folks popping on here. That's really cool, man. Just as good a thing to do as any on a Friday, talk about finances and talk about a pretty volatile stock week, no doubt about it. But I want to encourage you guys to invest. Yes, I do. But I want you to take it one step further, and I want you to ask questions about why it is you are investing. You have to justify it for yourself. If I've motivated you to go out and invest in the beginning of this week and it scared the hell out of you, but you remained vested, I have to applaud you. You're doing the right thing, because this has been kind of a scary time to just jump into the stock market and think, geez Louise, this is all I ever know is watching my accounts go down. And that's why I kind of talk about, deploy investing dollars over here, okay? And put your savings capital over here, and don't mix the two, all right? Don't mix the two. This is your savings capital over here, and this is your investment capital over here. Allow this to fluctuate. Allow it to do what it's intended to do, and that is accumulate over time. There's nothing in a 1 day or a 1 week or a 1 month or even 1 year that your investment dollars are going to pulse you in and tell you you don't deserve to be in the stock market. That's just not the way it works. They're going to go up and they're going to go down. But what we're looking for is a rate of return of 7 to 8, maybe 10% over time. And we're going to do our job, because I've put you into the account that's going to save you on the fees over time. So those are the justifications that I want you to make for yourself. Don't just look at me and say, I trust this guy. Hell, you don't even know me, right? I mean, I'm a trustworthy guy. And that comes through in my videos because I do all this stuff, but I really want you to validate this stuff for yourself. All right. So somebody hit me up with a pretty awesome question. What do you think about Facebook stock? I own 75 per shares, man. I've got 12,500 bucks in it. I probably bought it. I bought it a little bit off of its 52-week high, but not a whole lot. I could care less. Honestly, I could care less. You guys remember that yesterday during the day, I got a trading opportunity at around 162. I picked up 15 more shares of Facebook. This will pass. Does it change a whole lot with the business? Not a thing. Do companies have to be with Facebook? Yes, they do. Are there certain things that individuals need to educate themselves up on their own privacy rights? Yes, they have full control of that. And the statistics show that a member who puts full privacy restrictions in Facebook, you're actually 60% less valuable to Facebook as a customer to market to. All right. So if you're electively going to give your information to Facebook, right, and then complain that the information got stolen, right, I just don't think there's a whole lot that's really that important for me that can get stolen that's not FDIC insured or it's insured from theft, right? All my bank accounts are protected. Everything's protected. I'm not worried about somebody knowing my name. Hell, the next time you guys think that there's not information on your guys' name, go on to Google and Google your name. You'd be amazed at what comes up. So I think we're going to look back on this Facebook thing. It may go down more. I don't know. Nobody knows the direction of a stock. But one thing I do know is Facebook is one of those top 3 technology stocks that I want to own, and I do own. It's a 6% position holding in my portfolio right now. So I hope that answers your question. I don't know if it's something that you need to go jump in as a primary tech holding. For me, in my order of precedence, it's number 2 behind Google and Apple, no doubt. I mean, it's Google, Apple, and Facebook for me. For my top 3 technology holdings, and I'm 6% weighted in each of those stocks. So China Mobile's on sale. That's coming from Julio. I agree. No doubt. And you're going to pick up a 4% yield in the meantime. I don't know. I'm a long-term holder of it. I trimmed back my position in Verizon just a little bit because I was actually up pretty good. So I trimmed back to kind of equal out my telecom exposure. I try to keep that around 3% because it's a freaking boring section, but it's a good dividend paying section. And I own just, around 3% right now at telecom exposure. What do you think about the accessibility of millennial investing? Everything is done on apps now, Stash, Robinhood. Do I need to speak to a broker? This is the Elite Taylor. One of the most important questions that I've actually been asked. So important. And I've made videos on this, but I know there's a lot of new people coming to the channel, and that's awesome. But you have to understand that there is a deeper explanation for this. I understand that it's so easy to download Stash and Acorns and Robinhood. And I've went round and round with some of the other channel creators on Robinhood. And I think there's some channel creators that actually use Robinhood in a great manner. Nate O'Brien is a friend of mine. He uses Robinhood in the manner that it was intended to be used, right? So you need to start the self-directed account first. That's the first thing that you need to do. You need to start the self-directed, because Robinhood is not going to provide you the tax protection in your account. Your self-directed Roth IRA account will. Now, there's limitations to that account of $5,500, okay? So if you have that to max fund and you're single and it's $5,500 and you're married and you go up to $11,000, you guys have maximum caps to play. Now, if you're at $0 to $11,000 of investment capital, that should be your starting place. You don't need to look anywhere else. You don't, because you can own single stock within those accounts. I refer a lot of people to Merrill Edge, and my understanding is when you sign up with them, they will give you a lot of free trades when you kick over with them, which will help you establish the primary stocks within those accounts. So that actually helps with some of those startup fees. But if you start with Robinhood and you start trading in and out of stock, guys, I made this mistake myself with Scott Trade many years ago. And the IRS sent me a bill for $5,500 and said, congratulations, man, you've got to pay up on your taxes, okay? And that's what's happening with Robinhood is people are downloading it, they're trading in and out of stocks 200 or 300 times, and then they're going to get a big bill from the IRS, right? Because they've created a bunch of taxable situations. The way to properly use Robinhood is to put long-term plays in there and hold them beyond a year. But I still contend that it's better to do that in the self-directed account, because you're going to be tax protected on those gains into the future, right? So if you're going to buy an Apple and own it for 40 years, I would rather see you buy it in a self-directed account. That way, when you reach 59.5, any dollars that you've earned on Apple, you could pull those dollars off of there tax-free. So if you just think about it logically, and just kind of take your time, take some advice from somebody who's been there, done that. I've been there, done that. I'm not down on Robinhood. It just needs to come in the proper order. And unfortunately, for a lot of new investors, they're like, oh my God, I can save on the entry and exit fees, the $7 entry and exit fee. I've saved $14, right? And I can buy Apple stock for free. Well, what then, right? There's no question about, what taxable situation have I got myself into? Am I willing to hold Apple for at least 365 days to get into the long-term capital gain situation, as opposed to selling the stock short? Another thing I talk about is the option to sell short. In a self-directed account, I sold Amazon stock last year after 26 minutes of owning the stock. I was up $1,200. I could never do that with Robinhood, because I'd be whacked with the capital gains tax on the short-term side, right? But in my self-directed account, I'm absolutely okay doing that. And once those incentive levels kick in for you in your self-directed Roths, depending on what brokerage houses you guys are with, you guys are going to get the free trades. So why do you have to go to Robinhood to realize the free trades right off the bat? It doesn't make a whole lot of sense to me. So that's my response, and thank you for that question. I'm so glad somebody asked it. Invincible Summer, love your channel. Thanks for all you do. Hey man, I'm evolving with you guys. I was nervous, man, when I started this deal. It's kind of nerve-wracking to hit the play button. A lot of you guys know I don't script my videos. I don't need to. I don't. That's why they're raw. They're not cut. I don't edit it. I don't speed edit anything. I just give you a quick. I figure if you're interested in the message, I really don't think that there's too much to ask out of a 10 to 15 minute message. And quite frankly, I'm not looking to appeal to the general YouTube crowd. The folks that are building in my community and my subscriber base, man, we're all part of something special, myself included, no doubt about it. I feel like I'm part of something special. It's a movement. I feel like I'm part of something that a lot of people don't know about. And I feel like a lot of people need to be informed about it. And the only way that I could get the message out is to talk to multiple people at the same time. And I think there's a lot of referral stuff going on within the channel too, man. Friends, family, hell, all my friends and family know about it. All of them, they choose to do it or they choose not to do it. And that's totally fine. It's totally fine. But at least to know that there's other options out there for you, Powerful message. Yeah, thank you. What do you think about the IPO Dropbox? Phenomenal. I'm not a big, so IPOs have been really on a track record of not faring too well. If it's a Chinese IPO, I wouldn't touch it. but Dropbox has some comparable technology to CRM Salesforce, which I feel like is absolutely best in the breed in international cloud business. I wouldn't discredit IBM in this Rackus. It's been hovering around 150 for the last, I don't know, umpteen years. But I think with the cloud enterprise that IBM has, and also the blockchain technology, them and every other major tech that's coming out with to protect their transactions, I really wouldn't overlook them. Yeah, it's a fantastic investment. I think Dropbox will be one of those that I probably look back on and say, wow, I should have put an aggressive position. If you're going to invest in an aggressive position like a Dropbox on an IPO, please just keep it to 5% to your portfolio. There's no reason to take your entire retirement nest egg and throw it on an IPO like Dropbox. Because as good of a company as it may be, the market cap, what is it, guys? Market cap $6.5 billion on Dropbox. So, you know, that's why we talk all the time about getting that fundamental base and then the cornerstones in your portfolio. And then once you have that set up, I mean, I look at Facebook as an aggressive piece to my portfolio. You know, Dropbox isn't a stock I would invest in unless I was looking for an aggressive position in an aggressive tech company. But I wouldn't overexpose, and I would keep it under 5% if that's what you guys wanted to do, especially if you're young. Take the chance. I mean, good grief, we only live one time, guys. You know, have some discipline, have some fortitude, you know, hold on to it. If it does go down, you're going to have to hold the stock, because I'm not an advocate of selling in the red. I do not sell stock in the red. All right, I don't. If you get into the habit of buying a stock and expecting it to go up every single day, you are in the wrong business. I really recommend that you just do not invest at all. Don't invest. You have to understand that the ups and the downs are going to come, and that's just part of investing. But yeah, I'm a big fan of what little bit I've studied on Dropbox. Is fantastic company. I saw Morningstar report that they value it at around 14. Yeah, that's pretty typical. Analysts, I read analyst reports. There's a lot of YouTube videos out there of people that they perceive to know it all. That doesn't exist. All you have is the information that is available to you. And my recommendation to you guys is to become a student of finances. Okay. Now, Morningstar is actually one of my favorite rating companies. I actually used Morningstar in my evaluation of Micron Tech, which Micron, everybody came out and said it was going to 100. I looked at it and I considered it overvalued. That was just my opinion. Would I ever put $1 in it? No. I had guys at work that were dumping a pile of money on it because they think it could go to 100. Maybe it does. I don't know. At the end of the day, who's right or wrong in investing? Listen, if you make money on a stock, you're right. It doesn't matter what the analysts say. If Dropbox ends up going to 50 and you bought it at 28, you are a winner, irregardless of what the analyst says. Now, if Morningstar is saying that it's valued at $14, then there's probably some hype surrounding it. And I would be careful. That's why I recommend don't overexpose yourself to anything. You have to approach investing like it's a war, okay? And don't put your hard-earned dollars up irresponsibly, man. Put them up, you know, with as much information as you can. Don't just buy a stock based on hype or what somebody's telling you. I don't invest that way. I don't invest in the next best thing. I invest in the proven thing. So I'm looking at historical performance more than I'm looking at future performance. I really am. The reason why I bought into Facebook and Google is because of historical precedents. That's it. Apple, same thing. Procter & Gamble, Johnson & Johnson, Wells Fargo, Citigroup, all those good companies that I recommend on this channel all the time, those are the ones that I gravitate to because they've got a proven track record of delivering a phenomenal product. Disney is the biggest buy right now, guys, no doubt about it. If you want a quick stock pick right now over a Friday live stream, Disney is screaming buy right now. So if there's no better time, I know there was one of my guys that hit me up looking for a cornerstone in their portfolio, and I recommended Disney, Apple, and Procter. But Disney right now, no doubt, Disney right now has been just beat down for some legitimate reason, no doubt. I don't know if they would have picked up ESPN if Bob Iger has been apologizing for that deal, and it's like the second in line to their in revenue for Disney. It's a huge revenue maker for them. But man, they've taken a lot of heat for the reduction in cord cutting and the consolidation within the entertainment packages business and the satellite business. And a lot of you Netflix followers out there, you're probably going to agree. I don't watch Netflix. I don't. There's a lot of hype behind it. Will I buy the stock? Hell no. It's not a stock I want to own. That doesn't mean that it couldn't go up another 1,000% over the next 10 years. You know, it's one of those stocks, and it's created a huge ripple and paradigm shift in the entertainment business, where people just want to gravitate toward those platforms as opposed to buying, you know, satellite bundles. You know, so ESPN suffered, but Disney, mark my word, in the next 5 years we may be looking at a doubler or a tripler, no doubt. So yeah, Disney's my number one conviction buy right now. Some awesome questions. What are you trading options? That's funny. Yeah, options are pretty awesome. I do not trade options. They're like, I'm trying to wealth build right now. When I get my net worth up to, I've got certain goals before I start trading options, and I haven't quite built up to that level yet. Options are kind of the next tier after stock with regard to taking on the level of risk necessary. And actually my account, for some reason, they don't give me the eligibility to trade call options. I do have the ability to have put options put on my trades, which is more of an insurance hedge to the downside, as opposed to what I like to do, and that's speculate that a stock is going to go up. So I'm more of a call type of guy. And once those freedoms kind of evolve over time, then I'll do it. I don't know. Maybe it'll be a hobby that I pick up when I retire from my main job. So I know you really like Vanguard, but I'm already in E-Trade and plan on starting a Roth IRA account with them for seamless transfer of money over the next couple of years. Yeah, E-Trade's awesome. You guys have to understand, when I'm talking about brokerage to brokerage, it really kind of comes down to aesthetics. And this is where the Facebook group really comes in handy, because I can lean on folks. I've got Brent Metters, who runs another channel, Financial Investor. And he goes with M1. I don't know anything about M1. He does business with Merrill Edge like I do as well. But it's cool because I can bounce those ideas about, you know, certain capabilities. I can tell you all day about the thresholds of benefit within Merrill Edge. I can tell you about my conversation I just had with Vanguard last week when I was contemplating on maybe going with them for an account to grab a hold of their Admiral shares. I decided away from that. I did not want to do anything of the sort because their threshold of incentives are way too high. It starts at 500,000 for their Voyager program and then goes to $1 million to get basically lesser of a benefit than I'm getting right now in Merrill Edge at my thresholds, which start at 50K and 100K. So 100K, you're an elite trader. You trade for free. And anything over 100 grand, you trade for free. But yeah, E-Trade, from everything I've heard through my network of folks, is a phenomenal platform. As a matter of fact, E-Trade as a stock might be a screaming buy right now too. Actually, I saw that on a conviction buy list today. E-Trade along with Disney. So it's an awesome question, Nathan. Thank you, man. I appreciate that. And then Nathan also hit me up. They have free ETFs. Any reason to not use those free ETFs? Is it free on the trade side or free on the expense ratio side? So you need to clarify that, because I do pay the 0.04% for the two ETFs that I actually own. Three. I own VPU, which is the utilities Vanguard ETF. I also own VTI, which is the total stock index, and VOO, which is the Vanguard S&P 500, 0.04 on the expense ratio side of that. But I buy those for free in Merrill Edge as well too. So just make sure that they're not tacking on a 0.50% expense ratio. and allowing you to buy the stock for free. They're allowing you to save $7 to take thousands of dollars from you for owning the ETF going forward. ETFs are, traditionally very, very cheap to own. The cost of ownership are extremely low, but I've yet to find them lower than Vanguard at 0.04. There's some no cost or really low cost index funds issued by Chuck Schwab. You guys have seen the commercials on TV, but I don't like the funds. Okay, so they do that for advertising. They'll put a fund out there that's really less than superior, and they'll say that they're competing against Vanguard. But a true S&P 500 index fund, I've found no better than VOO at 0.04. All right. So thank you, Nathan. I appreciate those questions, man. I hope I answered them for you. MU is down 8%. Yeah, Micron, man. I don't know. I had a few guys at work, man, dumping a lot of money into Micron, and they actually had a good quarter. It got whacked on the report. I'm not really understanding why. It's, investing around earnings is a challenge. It really is. It can really pay off big. It's not something I advocate for a new investor. If you want to own Micron Tech, buy it. That's fine, but just own it for the long term. I think you'll be rewarded. I like the company. I like everything they're doing. I like Intel better. Intel for me is a value play. That's where it's at, man. And Intel will get it done for you as a cornerstone, certainly. So I've got Invincible again hit me up here. MU got downgraded by Jefferies because of expected drop in price of chips by approximately 12%. That's exactly what happens. And that's why AMD, kind of takes it. This business is so cyclical. Is when the cost of chips go up, you'll see these stocks really get whacked. The funny thing about that Jefferies downgrade is that you had a slew of companies coming up, jumping on the $100 bandwagon, up into earnings. I think that's funny. You'll kind of sense that if you pay more attention to the market, over the years, is that you'll have, all the analysts want to look good. Okay, they want to make that magical call, right? And then have the stock go up 25%, right? And they're all heroes. But the reality of the matter is they can look at the fundamentals. They can look at the stock analysis from a technical perspective. Nobody knows where a stock is going. Nobody. That's the truth of it. So really you just need to look at the company and say, is this a company that I want to be invested in? And at the end of the day, if you can say yes, then go ahead and put your dollars to work in it in the correct bucket. Again, the correct bucket, the bucket without holes in it, and start filling it up with that investment water, and it'll pay you back over time, no doubt. So yeah, Micron, that was good. Thank you, Invincible Summer, for that question. That was awesome. Thank you for the info. That was cool. Yep, you guys got dialogue going on. If you guys have not kicked over to the Facebook group, I'm letting folks in. I've kicked a few folks out. It's not one of those spots that I want any type of spam material. I don't do it for you. If I personally find an article that I like and I think really resonates with a new investor, then I'm going to put it to the Facebook group. I'm not going to deliver that through YouTube. It may stir an idea for me, but all that stuff gets dropped on there. But kick over there, man. If your intent is genuine and you want to learn from a really good group of folks over there, we just started the group. And I think there's some really kicking dialogue going on there. No doubt you could really, really accelerate your knowledge just by getting different perspectives on how a lot of my group members approach the stock market. Some of them differ than mine, and that's totally fine. It doesn't have to be cookie cutter, right? Each individual plan really should kind of reflect who you are as a person and what your risk tolerance to the stock market is. So kick over there to the group, man, definitely. What are your thoughts on GE? I'm disappointed, and I'm also encouraged. There's a bunch of things going on. If you guys did not buy the stock on my recommendation, congratulations. I bought the stock on my recommendation. I'm down 17%. It's a whole hell of a lot better than owning the stock at 32 and now watching it down at 13. Now, if you are an optimistic investor, how can you not be tempted by General Electric right here at $13 a share? You still got $185 billion market cap. You have three businesses that they do not have any competition in. They are it. Their moat is so wide in these three businesses. You've got rail, aerospace, and you've got their biggest one, which is, it's not energy. There's three pillars of their business, and the one is their flagship business. What they're basically doing is they're scaling down, and if you believe that this CEO, Flannery, is going to get it done, then GE's a buy right here. Okay. Now, I'm not saying it's going to go south of 10. It might. I don't know. I don't think that it will. I think we're going to be talking about $13 as a bottom in General Electric. I really do. I'm holding the stock. I'm down 17%. I'm not worried a bit about it. As a matter of fact, the only prudent move to do right here in General Electric is buy it, not sell it, buy it. I mean, that's the difference. When everybody else is selling and panicking, that's the time when you want to step in and you want to buy the stock. It's that simple. And what better industrial play than could you think of, man? For $1,300, you got 100 shares of General Electric. Cut it in half, $650. You got 50 shares of General Electric. Maybe a doubler here. Maybe a doubler within the next couple of years, because you get one sign of life with General Electric and it's going to pop, and it's going to be up over $20 quickly. So I'd be really, really careful with continuing to beat down General Electric right here. All right. Thank you for that question. That was awesome. I think I need more research. Nathan S. Yeah, everybody does. Everybody's evolving in the stock market. So I think I just got my first tip. That was amazing. I don't even know what Patreon is. So I think I just got a $2 tip on my, that's awesome. I didn't know that was possible. I don't do this for money. That's fantastic. Thank you. Thank you very much. That might be the first tip I've ever got in my life. That's amazing. Wow. Invincible. What can I do for you? Fantastic. Kick over to my Facebook group and I'll give you $2 of self-direct help for finances. It's the least I could do. That's pretty cool. Thank you. You made my night. Very cool. Thank you. I'm humbled. So I hope you're doing well. What is your advice for Kimberly-Clark and Procter & Gamble? Both phenomenal. Buy them both. Pick one of the two. I've owned Procter for years. Kimberly-Clark got brought up to me by another subscriber along the way. It might have been you, Juan. I'm not sure. But somebody else asked me about Kimberly-Clark, and I thought the fundamentals were fantastic. I'd buy either one of those two. Good cornerstone, same sector. I don't really think that you probably need to buy both at the expense of good quality names in other sectors. Guys, you haven't asked me at all about oil. I mean, come on. I mean, it's been beat down. It's established right here at 60. Do we think it's going to 40 or do we think it's going to 80? I mean, I don't know. They just postponed the Saudi Aramco deal. I own Royal Dutch Shell, I own ExxonMobil, and I own Chevron. And I also own Venom, which was a limited partnership that I offered on one of my stock picks, I think for February. It hasn't done a whole lot, but it's paying me an 8% dividend, man. It's a limited partnership. It's one of two that I own. I really would not discount owning 9% in your portfolio to energy, and you can get it done with Exxon or Chevron. Very simple. The third play that I pick up, which is a little bit more aggressive, is Royal Dutch Shell with a little bit more European exposure there, man. So good stuff. Good stuff. So what do you think about AMD? I don't cover AMD. When I met Ryan Scribner in person, I asked him about his shares in AMD. He had some really interesting insight, actually, some local insight, actually, on the factory itself, the business. I know people are up on the stock. I remember AMD when it was $2 a share. Here it is approaching $13 a share. Would I buy it at the expense of Intel? No, not at all. And that's the thing that you have to kind of balance. Like, what are you trying to do in your portfolio? Are you trying to safeguard money and invest it? Remember what I talk about all the time, guys, 70% of the riches that have been paid out in the history of the Dow Jones Industrial has come in the form of dividends, right? Dividends. So AMD does, I believe, pay a small dividend, I think. Again, I don't cover the stock. I am interested to see what it does from day to day. But don't think because a share price is $13 that it's somehow inexpensive, okay? And there's probably better chip stocks out there to buy. I mean, NVIDIA is the best in breed. you know. And NVIDIA is one of those really aggressive stocks that I haven't built out my aggressive portfolio for you guys yet, but NVIDIA will be one of those along with Netflix, right, in that aggressive investment camp, along with CRM, Salesforce, et cetera, those types of stocks, which are phenomenal companies, but I don't know. I mean, to each his own. I'd put AMD in the 5% or less category for your aggressive exposure in your portfolio, and good luck, man. If you guys make money, awesome. At the end of the day, this is about making tax-protected money within your self-directed Roth IRA account. And if you can do that, you're a winner. You're a winner, okay? I got Brian Zerfachi. Thanks for the info on GE. Are you into sin stocks? Seems like marijuana stocks are poised for rapid growth with legalization. Yeah, no doubt about it. It's interesting because you have our neighbors to the north in Canada, and then you've got the US, and we're about at least 10 years behind Canada on this. So it's interesting where you can kind of get an idea of some of those established Canadian offerers. And then you've got the United States, which are still toying with the regulatory restraints, right? So anytime a hiccup for regulatory boundaries come up in the US, the stocks suffer. So it's really aggressive. When I read your question to start, I thought you were talking sin stocks like Philip Morris, which I think Philip Morris right here is a screaming buy. And if you don't think that for a second when legalization picks up, that Altria isn't going to be a beneficiary of that. I'm interested in the industry. There's only one stock, really, GW Pharma, which is the only established represented name as a value investor that I can justify actually putting my money into. I don't currently invest in it, but if you guys are interested in getting into the industry, why don't you research it and try to find some ETFs out there, if there's any, that may give you more of a broader exposure to the sector, because I do believe it's one of the most exciting. I do believe it's one of the most revolutionary. Everything I read, I mean, I watch kids that are, suffering from seizures, right? And it cures them. Like, that's not, it's real. That stuff's real. So, for those parents out there, man, my heart goes out to you. Some of them are traveling across state lines to try to get to those states that are actually offering the product to help their children. You know what I'm saying? But I don't know, man, we're still stuck in our mindset from 50 years ago, I guess. We can't evolve in our thought process a little bit. But yeah, man, it's interesting to see the two programs, man, compared, when we're looking at Canada and we're looking at the US. But I think with cybersecurity, I think on the medical marijuana side of it, I think it's extremely attractive. And then you're talking about alternative energy. Those three on expand and blockchain. Blockchain is up there too. Those are some of the most intriguing, quickly evolving industries. And thank you for your question. That was a good one, really good one. How do we find your Facebook group? Yeah, so if you go to the Independent Investor channel, just click over to the link. And then click on groups within Facebook. You'll find it. I've posted the link a ton of the time. Matter of fact, I'm going to post it to this. Stand by a second, guys, and I'll pull it up here for you. Okay, cool. That was a live delay there. I don't really care too much, but go ahead and post this for you guys. Hopefully you guys can kick over on that link. So I just added it for you. You guys kick over there. I should have a bunch of requests after tonight, man. I'm glad to have you. If you can get any amount of benefit out of that group, I've posted a lot of articles, a lot of job resources. Some of my favorites that I feel are kind of somewhat underutilized is the compounding calculator, but it does account for expenses. That's the key. So many people want to talk about compounding calculators and, oh my gosh, if I put so much away, I can have $1 million someday. Yes, that's true, but you have to take into account the expenses that come off of that account every single year, and you have to factor that in. You have to. Otherwise, it's made up. It's fairy tale. Compounding interest is a fairy tale if you don't account for the expenses that are incurred year over year. So kick over to the group. How to create a Facebook profile. Yeah, I wasn't on social media 5 years ago, so this is all funny to me. But hey, if it helps people, that's awesome. That's what I'm about. Hopefully we can devote some of this money to charity someday, man, and help people who actually need it, you know? Any advice on creating a portfolio for a 5-year-old? Yeah, you bet. Start them in a UGMA, Uniform Gift to Minors Act. Uniform gift to transfer to minors. It's Uniform Gift to Minors and the Uniform Transfer Act, I believe. But if you Google UGMA, you're going to find that you can start that with any broker. My broker, Merrill Edge, offers it. All you've got to do is contact them, and basically it's a steward account. I've made videos on this on my YouTube channel, but I'll definitely tell you, if I were to invest for a 5-year-old, which I have a 6-year-old myself, so the way I would do it is just to set up a custodial account for them. You can buy whatever you want. You can buy VOO, you can buy VTI, whatever ETF you want. If you want to buy single stock in there, you can. The kicker is that when they reach the vesting age of 18 or 21, depending on the state that you live in, they will take ownership over that account when they reach that age of maturity. Okay, awesome question. Thank you. And absolutely, I advocate. I invested for my kids when they were born. So awesome. What about Ford stock? It's a buy. Ford stock's a buy. You can sit on the dividend. I don't own Ford. The only thing that worries me about Ford and GM both, and this is talking from a Detroiter, like I've lived in Detroit for a while, and it just kind of pains me. I'm not really into attaching my investment dollars to those companies that are really stricken by the unions. I really think that they have to sell so much product to really make up for what is unfortunately, a very necessary entity to protect the rights of the workers. But at the same time, right, it's very, very difficult to appease the needs and pay for, what comes through the unions. But I think Ford right here is a screaming buy. No doubt about it. It could actually be a cornerstone. I've got a few of those industries that I don't invest in. I don't invest in autos. I don't. I definitely invest in industrials. So I would look at a Cummins, or I would look at John Deere. I would look at Caterpillar. I would look at those companies to invest in. But as far as like investing in Toyota, Honda, I own one of each, but I don't invest in them. I don't invest in casino stocks, and I don't invest in airlines. So I do invest in rails. I think Union Pacific is one of those companies that you could buy and own forever. But to answer your question, I love Ford. I think it's a great buy. So if you wanted to add some to your portfolio, it's a self-directed account. You can do whatever you need. I don't think it's going much lower than where it is right here. Any advice on dividend investing portfolios? Yeah, so I'm really trying to work toward more of a 50-50 blend. 50-50 in that 50% of my assets are held in passive long-term investments that are diversified, i.e. index funds, or what I prefer is ETFs, exchange traded funds. And I offer, my very favorite is through Vanguard, no doubt about it. Because they just provide the best product for the lowest price on the market, and you can buy them through any brokerage house. So that's my advice. Dividend investing is really the way to go. You have to be patient. Dividend investing is just that. It's not trading. So if you're going to buy Pfizer and Merck and Johnson & Johnson, Procter & Gamble, Verizon, all companies that I own personally, you have to own them for the long term. Okay, they're not trading positions. You're not going to trade into a dividend stock and expect to make money the next day. You're going to want to own those for years, right? So I'm a big advocate of dividend investing. The question becomes, how much of your portfolio do you want to devote to a dividend portfolio? And you own single stock, let's say you own 5, it can be 25% of your portfolio, or it can be half of your portfolio, or it can be exclusively dividend portfolio. But if you've paid attention this week, those blue chip Dow names, those big blue chip dividend payers, those have really, really gotten crushed, no doubt. So you got to be kind of careful. I do still consider single stock investing risky. I do. I think the smartest and best way to approach the stock market is by passive, long-term investing. Diversify your base right away and just let the assets ride. Don't tinker with it. Let it go. All right. You just mentioned blockchain. What is that? Yeah, blockchain is the technology that protects transactions. And with all the data breaches going on, most notably with the most recent Facebook data breach, I've studied blockchain in depth. I think it's phenomenal. Am I going to go out and buy Bitcoin tomorrow? I think Ethereum is extremely attractive. But there's a bunch of cool YouTube videos out there. I'm not an expert on the topic, but there are a few folks on YouTube, man, that know their stuff with regard to blockchain. And it's basically, you have a producer of a message and you have a receiver of a message. And then the technology exists between the protections that are offered by the sender and the receiver to protect the integrity of that transaction coming together. And it's algorithmic. It has everything to do with the codes that are offered and that are only offered to the receiver of a particular transaction. So that's kind of blockchain a little bit. I'm not an expert on the topic, but what little bit I do read about it's incredibly intriguing, in that we are in a digital age and we've been there for, going on a couple decades already. But there hasn't really been a whole lot of acknowledgement to the importance of protecting all transactions, because a block of lost data that's deemed personal is a big hit, and Facebook's paying for it, no doubt about it. And they'll continue to pay for it at my expense. I'm a stockholder in the company, but that's just what it is. So Ryan, are you buying physical silver? Man, I would like to. I really would. I'm showing some reservation on precious metals, and I'm showing some reservation on real estate right here. I think real estate is in trouble right here. If you own a home in the United States, congratulations, because you're probably at the top of the iceberg on this stock market, no doubt. On the real estate market. And with the real estate market being as high as it is, I really don't want to double down on what I feel is an equally high market, especially with interest rates going up and housing inventory being at an all-time low. So I'm actually going to continue to rent. That I have no problem with that. I've owned in the past. I've done quite well with real estate. But as far as precious metal goes, I don't consider precious metal an investment. I consider it a hedge. So the problem with me moving around every 4 or 5 years is the transferability. And I think it's extremely important that if you do own gold or silver, that you tell no one. Don't tell anybody that you own it. And that comes with it a level of responsibility, because I think the first thing that you do when you get something physical, it's human nature to say, hey, look at what I got. Look at these new coins I got. Or, hey, man, I picked up some awesome coins or silver, whatever it is. And really, I think you have an obligation to hold on to that, because really, when I buy silver and gold, I own some gold. My intent is not as an investment, it's to hold it and pass it on as a legacy. So that's really what I'm looking at. I hope that I would buy silver here. Silver's a buy. I think it's one of the most intriguing investments actually out there. And I would like to add some silver to my portfolio. It's probably one of my top 5 things that I would like to add, along with some Amazon stock. That's next on the list. So Rick Levine, man, awesome. Hey, Ryan. And gang, I just got out of work. How you doing? I'm doing awesome. I just thought I'd jump on here, just kind of do a trial run. It's raw, live uptake. So I just thought I'd see how this works. So Um, rent where you want to live and own what you can rent. Well said. That's awesome. I agree. I know I love Grant Cardone. Awesome. Do you invest in Bitcoin? I don't. I don't invest in Bitcoin. I think I'll regret. I think I'll regret it. I really do. Not necessarily Bitcoin, but I don't know who's going to come out of this smoke as the leading cryptocurrency. There are ETFs out there that have just been recently introduced to the market. If you were looking to add a little bit of exposure of cryptocurrency to your portfolio, do it. But don't do it any more than 10% of your portfolio, please. Keep it in check, okay? You're going to have a risk tolerance of 7 to 10 because it's going to fluctuate in value. It may go up really, really fast and may go down really, really fast. But I think with the international or enterprise buy-in of cryptocurrency and also blockchain technology, which I've already mentioned, I think that's again one of the top evolving markets. I think to really pay attention to. It's very interesting, no doubt. I've heard timing the market is near impossible. How do you know when to sell? If I invest now, how to protect against a bear market? A 50% loss needs 100% gain to break even. Can be scary. You know what's even more scary about that fact is that you don't need 100%. Actually, you need more than that because you're not accounting for the fees in a financial planning situation. It's real dollars in a self-directed account. My hedge, first to answer your first question, when do I know to sell? Anytime I'm in the black, that's when I can sell. You can sit there and put rules on it of 10, 20, 30%, 50%, and then you go ahead and sell and take profit. I buy with the intent of holding a stock my entire life. That's my intent. So I intend never to sell, ever. I think selling has been some of the worst things that I've ever done in my career. And the earlier you can embrace that, in that when you enter into a stock, you want to keep those dollars invested in that stock as long-term as you possibly can going forward. All right. You don't want to throw in the towel early. That's one of the biggest mistakes. If you're going to invest in Apple stock, just own it forever. If you bought Amazon when it came out, it would have been up 35,000%. So there never would have been a time to justify selling Amazon, right? If you would have. Now, if you were up 1,500% in Amazon and you sold the stock, you're not going to have me telling you made a bad trade. Of course not. You made money. But I have a few fundamental rules that I abide by. I'm down in most of my positions right now, my new positions that I've got a hold of, because the stock market's gone down. It doesn't mean I'm selling. I'm holding. And the only thing that I would look to do is actually buy more. So conversely, when a lot of people are looking to sell, I'm actually looking to buy and add more to my portfolio. And I've been very successful at doing that. It's not rocket science. You just have to change your thinking and be that investor that's able to look at a stock that you invested in, like an Apple, and say, wow, it's down 20 or 30%. Do I have the mental fortitude to actually add more to the stock, as opposed to panic and exit the stock, which honestly, it's a lot easier said than done, because a lot of people will panic and exit, a lot of people. And that's just, it comes with the mental conditioning. And that's what I encourage all you guys to look at the stock market and what it's done over the last couple weeks or months, or even the entire year of 2018. Allow yourself to learn, okay? You're still the same person you were on January 1. Your stocks are still the same companies. They've went up and they've went down severely. What have you learned? What could you have done to put more hedge? I look at dealing with a bear market to look at the amount of investment capital that I have put away during a bear market. Am I just as happy to have whatever amount in there? Am I just as happy to be invested in each stock that I have in a bear market or a bull market? And the thing that helps me answer that is the amount of cash that I have on the side over here. All right. This is the cash over here that I will not devote to the stock market over here unless conditions are perfect. Nobody can time the market. You're exactly correct. But this is my sleep easy money, and this is my investment capital over here. And if I'm abiding by a few preliminary rules, like getting my bucket correctly, starting the right account, eliminating and reducing fees in the account, and investing in long-term passive assets or safe blue chip single stock allocation, that's the best I can sum up the stock market for you guys. A lot of people make it way more difficult than it has to be. And that really is the essence of becoming an investor, is getting your assets harnessed in the right account and enjoy the fruits of that benefit. If you get the thing started correctly, you really don't have to look at it. Look at it once a year if that's what you want to do, but just forget about it. You'll be glad you came across the Independent Investor channel someday. You'll be glad you did it, no doubt about it, because you're never going to regret getting into a situation where you looked at it from a logical perspective and said, I need to get into an account that's going to protect myself against the government, and it's going to protect myself against middleman. This account and program does both for you. All right. I hope you're recording this for review later. I think I am, actually. I'm going to upload the stream so you guys can play it back later, but I am going to cut it off. I've been talking for an hour and 10 minutes. I could talk all night. I'm going to actually try to curtail. And I know a lot of people hit me up and they tell me my YouTube videos are too long. I don't care. I'm open to criticism, and that's great. A lot of it's justified. I should be making 6-minute videos. I get that. Maybe someday I'll streamline it, but this is my favorite topic. I love helping people. If you got a little bit of benefit out of this over a little bit of an hour, out of an hour-long live stream, man, then we've done our job. You know what I mean? If you feel a little bit more empowered than you did, during the day today when the stock market was going down, awesome. We've done our job. And that, at the end of the day, really is the goal of the Independent Investor channel, man, is to empower individual investors, man, to invest in the stock market. I'm going to hit this last question up because he hit me up with 3 questions. So hope you're recording this review. I do. Brilliant. My employer matches the 401k contributions. Do I contribute there or invest in the self-directed Roth IRA? Awesome. Awesome question. Thank you for asking it. In a Roth 401k, 401ks are great. I recommend investing in the 401k insofar as you get the matching contributions, if applicable, within your 401k, and then take any overage from that. Any overage in that, meaning if they're going to match 6%, make sure that you're giving the contribution level enough to where you can realize that 6% match, because that's free money and we always want to take that. But any overage to your contribution, any accessible, you can go ahead and roll over and kick over and start that self-directed Roth IRA account in addition to your 401k. So hopefully that helps you. If you need amplifying on any of this information, just hit me up directly and I'll help you. Thanks for the live stream. You should do it weekly. Yeah, I think I might. I think I'll do this every Friday. That's the best. I just don't feel like recording on Friday. I don't feel like all the editing that it takes to get a YouTube. I do everything myself. And this is a much easier, streamlined way of getting information really stovepipe to you guys. And that's really the way I like it. So great info. Can't wait for your next episode. Thank you, Nyella. She's from Canada. She hit me up for some direct advice, guys. Just one of those people that hit me up, man, genuine email directly to me. And I was touched. And hopefully the advice back to her helped, just like everybody else that I've helped, guys. I'm going to sign off. It's been over an hour. I'm starting to lose my voice. But really stay strong, stay steadfast. Know that we're going to go through some volatility over the next few months in the stock market. Reflect over this year when we reach year's end and make sure that you've made the correct decisions to stay long on the stock market. Stay disciplined. Do not get emotional about the stock market in any way whatsoever. Guys, thank you guys for tuning into this live stream. I really appreciate it, man. It's awesome. Good luck in your investment future, guys.